Welcome in, everybody, to another deep dive with us. Today, we're going to be looking at investment advice.
Yeah.
That thing that even seasoned investors, grapple with sometimes.
Right.
We are dissecting an article today that breaks down, everything from defining what it even is to how to choose the right advisor if you even want to go that route.
Right.
But get this.
Okay.
Studies have shown that portfolios that are managed by a financial advisor they tend to outperform DIY portfolios over the long run.
Interesting.
So we're going to be exploring why that might be.
Yeah, that's fascinating, isn't it? Like, there's this misconception that advice is just for beginners.
Yeah.
But, even those who are comfortable managing their own money, they often find that an expert can add a lot of value.
I think that's a really good point.
Yeah.
Okay, so let's back up for a sec. For someone who's maybe hesitant to, hand over the reins of their, financial future,
Yeah.
what's the simplest way to explain what investment advice actually entails?
So imagine this. You wouldn't wear a suit that's 3 sizes too big.
Right.
Or too small.
No.
You'd want something tailored to you.
Of course.
To your measurements.
Yeah.
Investment advice is kind of like that.
Okay.
It's about crafting a strategy that's personalized to your goals, your risk tolerance, and your time frame.
Right.
It's not one size fits all.
I love that analogy.
Right. Yeah.
So it's not just about picking stocks. It's about creating a whole financial game plan, right?
Exactly. And it starts with understanding your needs.
Okay.
Not just what you want to achieve, but what you're comfortable with in terms of risk.
Yeah, that makes sense.
Then we can look at asset allocation.
Okay.
And that's deciding how much of your money goes into different types of investments.
Right.
Like stocks, bonds, real estate,
Yeah.
maybe some alternative investments.
Okay.
It's like creating a diversified recipe for success.
Diversification, I've heard that term thrown around a lot.
Yeah.
I got to be honest, I sometimes tune it out because it sounds kind of technical.
Yeah, I understand.
What's the best way to understand why it's so important?
Think about it this way. If you put all your eggs in one basket and you drop that basket,
Yeah.
you're in trouble.
Big trouble.
But if you spread them across several baskets,
Right.
the risk of losing everything
Okay.
is reduced.
Makes sense.
That's what diversification's all about.
Okay.
Not putting your money into one type of investment.
Yeah.
Spreading that risk and smoothing out the bumps along the way.
Got it. Okay.
Yeah.
So you got your eggs all spread out.
Right.
What's next?
That's when we look at choosing specific products
Okay.
within each asset class.
Yeah.
So, for example, within stocks,
Yeah.
you might have a mix of large cap, small cap,
Okay.
domestic, international,
Right.
maybe even some sector-focused funds.
Interesting.
Bonds could include government bonds, corporate bonds,
Okay.
municipal bonds,
Huh.
real estate. You could explore options like REITs or direct property investments.
So it's like building a well-rounded team
Yes,
with their own strengths and roles to play.
exactly. But it doesn't stop there.
Okay.
We also need to consider strategies for managing risk. And there's a whole toolkit for that.
Okay.
Things like hedging,
Hedging.
which is about using financial instruments
Right.
like options
Okay.
to protect against potential losses,
I see.
and rebalancing,
Very balance of
which
two
involves periodically adjusting your portfolio
stuff.
to maintain that asset allocation.
Okay.
Yeah.
So hedging, rebalancing.
Right.
This is where I think the value of having an expert really comes in.
Absolutely.
Right. Because this stuff is complex.
Yeah, these strategies can get complex,
Yeah.
and navigating them effectively requires a deep understanding
I see.
of financial markets
Yeah.
and risk management.
So investment advice isn't just about picking stocks.
Right.
It's about weaving together all these elements, understanding my needs, spreading my risk,
Right.
choosing the right investments,
Yeah.
and having a plan to navigate the market.
You got it.
Okay?
It's a holistic approach to managing your money
Uh-huh.
with the goal of helping you reach your aspirations
Okay.
while minimizing the stress.
That peace of mind sounds pretty appealing.
Yeah.
But isn't there also a certain peace of mind
Yeah.
that comes from feeling in control of your own finances?
Absolutely.
How do you balance those two things?
That's a great question.
Yeah?
And it gets to the heart of why that relationship between the advisor and their client is so crucial.
Okay.
Yeah.
I'm ready to dive into that relationship.
Okay.
But before we do, let's acknowledge the elephant in the room.
Right.
Or maybe it's more like the piggy bank in the room.
Okay.
What about the cost?
Ah, yes, the fees.
Yeah. Isn't financial advice expensive?
That's a common concern.
Yeah.
It's an important one to address.
Okay.
But let's unpack those fees
Ow.
and the potential challenges in the next part of our deep dive.
Oh, okay.
Because just like with investments themselves, there's a whole spectrum of options when it comes to the cost and structure of financial advice.
All right. I'm looking forward to it.
Yeah.
See you in the next part.
Okay. Welcome back to our deep dive into investment advice.
All right.
Last time we talked about how even seasoned investors,
Right.
they can benefit from having a personalized financial game plan.
Yeah.
But like any good plan,
Yeah.
it comes with a price tag.
Right. We left off talking about the cost of all this, expert guidance. Fees can be a big hurdle for some people.
Right.
Myself included, let's be honest.
Yeah.
Nobody loves handing over their hard-earned money.
No one wants to feel like
Yeah.
they're paying for something they don't understand.
Exactly.
So transparency is key.
Okay.
And that includes being upfront about how fees work.
So break it down for me. What are the different ways that advisors structure their fees?
So there are a few main models.
Okay.
Some advisors charge a flat fee
Okay.
for their services,
Uh-huh.
kind of like hiring a consultant
Yeah.
for a specific project.
Right.
This can work well if you have a defined need,
Okay.
like creating a financial plan
Uh-huh.
or getting help with an investment decision.
Okay, that makes sense.
Yeah.
What are the other options?
Then there's the commission-based model,
Okay.
where the advisor earns a percentage
Mm.
of the investments that they sell you.
I see.
It's like a salesperson earning a commission on a sale.
Ah, okay.
Yeah.
That's where that potential conflict of interest comes in.
Exactly.
Right.
It's important to be aware of that structure
Uh-huh.
and ensure that the advisor is prioritizing your best interests,
Okay.
not just pushing products that earn them a bigger commission.
So how do you know if an advisor is truly putting your needs first?
That's where the fee-only model comes in.
Okay.
Fee-only advisors are compensated
Okay.
solely based on a percentage of your assets under management.
Interesting.
So their income is directly tied to how well your investments perform.
Right.
So their incentive is to grow your wealth,
Gotcha.
not just sell you products.
That seems like a much more aligned approach.
Yeah.
Is that the model that you recommend?
I wouldn't say I recommend one model over another.
Okay.
It
Yeah.
depends on individual needs
Uh-huh.
and preferences.
Yeah.
However, fee-only advisors are often seen as more transparent
Okay.
because they don't have that potential conflict of interest
Right.
that can arise with commissions.
Transparency. Got it.
Yeah.
Now, beyond fees,
Okay.
what are some other challenges
Sure.
or potential downsides to consider when working with an advisor?
Well, just like any relationship,
Uh-huh.
communication is key.
Okay.
You want an advisor who speaks your language,
Right.
who can explain those complex concepts
Yeah.
in a way that you understand,
Uh-huh.
and who is responsive to your questions.
Yeah. Communication makes or breaks any relationship.
Absolutely.
What are some red flags to look out for?
One red flag is an advisor who uses a lot of jargon or talks down to you.
Right.
You want someone who can educate you
Right.
without making you feel intimidated or confused.
It's my money.
Exactly.
I should feel empowered
Yeah.
to understand what's happening.
Yeah.
What else?
Another potential challenge
Okay.
is finding an advisor
Uh-huh.
who truly understands your goals
Okay.
and your risk tolerance.
Right.
If they're pushing investments that make you uncomfortable
Yeah.
or that aren't aligned with your long-term vision,
Right.
that's a sign that it might not be the right fit.
So you're saying it's okay to push back
Absolutely.
and ask questions?
Yes.
If something doesn't feel right?
Yeah, it's your financial future.
Right.
And you should feel confident
Okay.
that your advisor is working with you, not against you.
I'm starting to see that having an advisor is more than just about picking stocks. Right.
It's about finding someone you trust, who understands your vision,
Right.
and can guide you through all this stuff.
It's a partnership.
Yeah.
A good advisor empowers you
Okay.
to make informed decisions,
Right.
even if you don't become a financial expert yourself.
Okay. I'm sold on the idea of a financial partner.
Okay, good.
But with so many different types of advisors out there,
Right.
like from robo-advisors to private wealth managers,
Yeah.
how do I even begin to narrow down the search?
That's where things get interesting.
Okay.
Each type of advisor caters to a different niche,
Mm-hmm.
and understanding those strengths
Okay.
and weaknesses can help you find the perfect match.
All right, let's dive into that landscape of advisor types, the next part of our deep dive.
Okay.
Because honestly, the more I learn about this, the more I realize I don't know.
Yeah. That's how it goes sometimes.
Welcome back to the final part of our deep dive into the world of investment advice.
Yeah.
We've talked about what it is.
How it works and even some pitfalls. But now for the big question.
Okay.
How do you choose an advisor that's right for you?
It's like dating.
Oh.
But for your finances,
Okay.
there's no one size fits all.
Right.
But there are some key steps you can take to narrow it down and find the perfect match.
Okay. I'm ready to swipe right on my financial soulmate.
All right.
Where do I even start?
So remember that landscape of advisor types we talked about? Each one caters to a different niche.
Okay.
Let's start with robo-advisors.
Okay.
The newcomers.
Robo-advisors sound intriguing.
Yeah.
But also a little impersonal.
Right.
What's the appeal?
Think of them as the digital age of investment advice.
Okay.
They use sophisticated algorithms to create and manage your portfolio.
Okay.
Typically at a lower cost than traditional advisors.
So for someone like me,
Yeah.
who's relatively comfortable with technology and maybe a little intimidated by the whole financial advisor thing, robo-advisors could be a good entry point.
Exactly. They're a great fit for DIY investors
Okay.
who want some guidance, but prefer a hands-off approach and lower fees.
I see.
You just answer a few questions about your goals
Right.
and risk tolerance, and the algorithm does the rest.
Sounds pretty effortless.
Yeah.
What if I want a more personalized touch, though? Someone who really gets to know me and my situation.
Then you might consider a certified financial planner.
Okay.
Or a CFP.
A CFP.
They're the gold standard when it comes to holistic financial planning.
That's comprehensive.
They cover everything.
Wow.
From investments to retirement planning, taxes, estate planning, even insurance.
It's like having a financial quarterback.
Yeah.
Right. Someone to strategize every aspect.
Exactly.
Wow.
They're not just focused on picking stocks.
Right.
They look at the big picture.
Okay, so if I want that big picture approach, a CFP is the way to go. But what if my main focus is just investment management?
Okay.
And I want someone who is legally obligated to put my interest first.
You'll want to look for a registered investment advisor.
Okay.
Or RIA.
An RIA.
They're held to a higher standard of care, known as fiduciary duty.
Okay.
Meaning they're legally bound to act in your best interest.
That fiduciary duty sounds crucial.
Yeah.
So RIAs are the ones to consider if I want that extra layer of protection.
Exactly. They often work on a fee-only basis,
right,
which adds another layer of transparency.
Okay, got it.
Yeah. RIA's fiduciary duty fee-only transparency.
Right.
But what if I'm more hands-on?
Okay.
And want to actively trade stocks and get some recommendations?
You're right. That's where a stockbroker comes in.
Okay.
They specialize in buying and selling individual securities. They provide research recommendations and execute trades on your behalf.
So if I'm feeling adventurous, a stockbroker could be a good partner.
Exactly.
What about those high net worth folks?
Right.
Do they have a different breed of advisor?
For those with substantial assets,
Okay.
private wealth managers offer a tailored experience.
Okay.
Think sophisticated strategies, estate planning, tax optimization, philanthropy.
Wow, it's like the VIP service of the financial world.
Pretty much.
Okay, so we've got robo-advisors.
Yeah.
For the tech-savvy CFPs, for the holistic planners.
Right.
RIAs for the fiduciary-focused stockbrokers, for the active traders.
Yep.
And private wealth managers for the, wealthy.
That's a lot to digest.
It is a lot.
But remember,
yeah,
the key is to start with your needs.
Okay.
Think about your goals, risk tolerance, comfort with technology, and how much hand-holding you want.
Okay, so I need to figure out what I want first.
Yes. Once you have some clarity, you can start researching different advisors. Look at their websites, check their credentials.
See if they specialize in any areas that are relevant to you.
So I'm doing my detective work.
Exactly.
What kind of information should I look for?
Definitely check for those credentials we talked about. CFP, RIA, etc.
Okay.
Those designations indicate they've met certain standards. Also look for their experience level.
Right.
And whether they've worked with clients like you.
So experience and a good track record.
Yes.
Okay, what else?
Don't underestimate the importance of a good fit, personality-wise.
Okay.
Look for testimonials. See if you can get a sense of their communication style.
Okay.
And whether they're someone you'd feel comfortable talking to.
So it's not just about numbers.
Right.
It's about finding someone I can trust.
Yes.
And who understands me.
Exactly.
And don't be afraid to ask questions.
Right.
During that initial consultation.
Yes. This is a big decision.
Okay.
You deserve an advisor who's a true partner.
Well, that's it for our deep dive into investment advice.
Yeah.
I feel a lot more informed now.
That's great to hear.
About my financial future And to our listeners out there,
Yeah.
whether you choose DIY or an advisor,
Uh-huh.
we encourage you to keep learning.
Right.
And keep asking questions.
Yes.
And keep striving for financial well-being.
Happy investing, everyone.